With so much time dedicated to growing geopolitical concerns, it's easy to forget about Bitcoin and the cryptocurrency complex. Here with us to provide much needed guidance to this re emerging sector is Nicholas Gregory. A software engineer and successful cryptocurrency investor, Mr. Gregory left powerhouse bank JP Morgan to develop high-level blockchain applications. He is currently the CEO of Commerce Block, a next-generation blockchain ecosystem. The timing for what Mr. Gregory has to share cannot be any better. Recently, Bitcoin breached the $5,000 level for the first time this year, setting into motion a potential long-term recovery. We laid out a groundbreaking analysis for digital assets, which you can find at crushthestreet.com/crypto. With gold, you can secure your wealth. With Bitcoin, you can exponentially multiply it. So do yourself a favor and check out crushthestreet.com/crypto. And now, let me introduce to you Nicholas Gregory.
Hello, everyone, and welcome into crushthestreet.com. Well, what a time for me to be speaking to my next guest, someone in the crypto space, but very timely in terms of what is going on with the cryptocurrency prices right now. It's a sea of green. If you go to CoinMarketCap right now on April 2nd, 2019, Bitcoin, hit $5,200. It went over the $5,000 range. We're hitting all-time highs for the 2019 year at the moment. So really exciting stuff here. We're going to be talking to our next guest, whose name is Nicholas Gregory. He's a technologist who used to work on Wall Street and now the CEO of Commerce Block. And we're going to be discussing, money and digital assets in this new economy, this new ecosystem of how digital assets are going to be stored and managed and just in the world that we use today. So it's an exciting time to be speaking to him. Nicholas, thanks for coming on Crush the Street with me today.
Yeah, thank you for having me.
So I got to ask you, let's start off with the cryptocurrency prices. Bitcoin in particular hit over $5,000. It's around $4,700 at the moment. What are your thoughts on this at the moment? What's going on? Was it the April Fool's joke of the SEC approving an ETF? I mean, what's going on? And that being enough to cause this massive surge of buying into crypto?
Well, I mean, originally I thought it was an April Fool's joke, if I'm honest. But even though it's been a long bear market, lots of things have happened in Bitcoin. We've seen a lot of developments on the technology side. We've seen a lot of institutional investment coming in. Also, these depressed prices, somebody's been buying them. I mean, there have been buy orders, and I think there's been a lot of accumulation. I don't know why the price popped last night. I'm as baffled as you are. I'm not really into price predictions. Whenever people say how to trade Bitcoin, I say, look, it's something you buy, forget about for 5 years, but I'm pretty sure long-term it's going to do well. But I also think, although there's been a lot of negativity about the price, there's been a lot of software development that's happened. You've seen the Lightning network that's come on leaps and bounds. I'm seeing more and more applications coming on that are using Bitcoin in ways we didn't imagine years ago. So I think there's been a lot of development, and maybe this is a turning point, maybe this isn't, but I still think the whole environment is looking very good at the moment. So,
$3,000, $3,500 Bitcoin is starting to look like a deal considering where we are at the moment. I mean, you kind of alluded to it now. Do you think we've seen a bottom here? Is it likely to not go too much lower considering the market cap and the amount of interest that's coming into the cryptocurrency space?
Well, I mean, I've never been one to do price predictions, but obviously when you work in Bitcoin, you get this asked all the time. And I've always said, I expect this to hover around the 4 to 6K until we see more applications come in. And it's a bit like the early days of the internet where, there was a lot of promise with things like Amazon.com, but until the Amazon.coms made it easy to purchase things online, we didn't really see a movement. And I think, the price will be very much a speculative price till we see more user applications. But we're seeing that Lightning is moving on leaps and bounds. We're seeing more and more applications that are accepting Bitcoin. We're seeing more custodial services. If you look at one of the issues of Bitcoin, is how do you manage it? How do you keep it? A lot of people don't want to keep all their money on an exchange. It's no different than keeping your fiat in a bank account. And Bitcoin is about moving away from that. So we are seeing more and more, and we're seeing more institutional involvement, and that gives people more confidence in the product and in the technology.
Absolutely. And I made a mistake saying Bitcoin hit a high of $5,200. I was looking at something else. It must be all that lack of sleep I've been having lately. But a high near $5,080, still over the $5,000 mark. So true. Everything you're saying. I mean, the infrastructure that's coming into the community. I mean, I go back to this all the time, going to the North American Bitcoin Conference in January of 2018, when everyone bought their Bitcoin at peak euphoria. In December, when Bitcoin was $20,000. I mean, it just seemed like there was no stop to it, considering all the money that was pouring into the space. Obviously, if you're smart and you're objective, you can say, hey, it's getting euphoric here, and this can certainly turn around. A lot of bankruptcies can take place, and a lot of problems can, propagate through the community, obviously, and really turn this into a brutal bear market. But considering how much we've come down now, the market cap is what, $163 billion here total. I mean, with all the prices moving up at the moment, it's still such a small little space. Just a small move into this is going to have massive implications on price here. And I got to start to really think that we are at a bottom here, where it's going to be very difficult while all this development is happening for prices to go much lower. So, I mean, before we go into any other topics, if you want to respond to that, feel free, and then we can jump into some of the technologies that obviously you're working on.
Yeah, and there's two sides to it. There are people that are going to remember the bear market. I mean, a year in crypto is a long time, and there are people that are probably maybe going to look at making profits. They'll think, okay, I have a business. Maybe I need to take profit at 6K. Maybe I have to take profit at 5K. So it's hard to predict. I don't, obviously there's a lot of people going to say we're going for another bull run. I think that's unlikely, because I think it's still fresh in our memories that the crash from 20K to 3K. So I think people will be looking to take profit, whether that's because they've got a business based on Bitcoin or whether they need to pay taxes. I mean, there's going to be multiple variables here, but it's positive. Bitcoin needs a high price to be secure. A lot of its security comes from the ability to attack it, and with the price relative, on the going upwards, it becomes harder to attack. So, and the press will obviously mention this, and this is only bringing more people into the ecosystem.
Yeah. One of the things I was reading today, and it was kind of a pundit discussing why they think it's insignificant as to why we saw this price movement, was that Bitcoin is the cryptocurrency markets, the volumes are spread across so many different exchanges. So a flood of volume into one exchange can have a massive implication on the price, which is kind of hard to, I guess, efficiently price the entire ecosystem based on the way that it trades at the moment. I don't know if you agree with that.
I would agree with that, because I don't know if you remember about a year ago, there was the kind of like the pricing was off on CoinMarketCap for Bitcoin Cash, and that kind of skewiffed many things. And I've seen it with small cap ICOs when maybe there's a bit of confusion about a token that's got the same name of another token, and they confuse things, and suddenly that spiked by 60% when it really hasn't. And we have to understand the technology, the infrastructure here is still very immature. So getting a real feel of what the actual price is not exactly 100% accurate. So we don't know. That's the bottom line. And this is immature infrastructure. And we have to remember, Bitcoin is still beta technology. And until we're using it day to day, it's beta technology. We mustn't forget that.
I like what you said there, talking about, you went back to the investor psychology, people remembering the bear market, remembering different times. You talked about the 20K to 3K drop. But, something that I really pointed out to people was the 6K. The 6K to 3K drop.
That was probably harsher.
Because, we were in that for like 3 months, from like August to November, we were in that $6,000 to $7,000 trading range, and everyone was comfortable. Everyone was like, man, we're forming a bottom here. And then the floor falls out from under, Bitcoin and just completely smashes everybody by like 50%, right? And that was brutal. So I think everyone is going to be very cautiously optimistic here. And maybe they will. Maybe they'll trade these prices, and take little profits, thinking that it's just going to kind of bounce from 5,000 to 4,000 for an extended period of time, and then until it does its own thing again and completely washes and rinses investors.
Mm-hmm. Yeah, I remember that period being actually harder because we all loved the 20K price, but I don't think it was actually a relatively short period of time that Bitcoin was that high, and it went so quick. But you're right, it stayed around 6K. And I do remember businesses were kind of like, we're saying it's going to be around 6 to 10K for the next few years. That drop, and I think the drop from 6K came from an outside event. I think it came because there was a kind of a fork in Bitcoin Cash. Yet for some reason that damaged Bitcoin itself. And that showed how brittle the ecosystem was. And I think that really damaged more businesses than probably the going down from 20K to 6K, because it was over a much shorter space of time, and we've kind of settled at 6K for quite a while. I think miners were kind of comfortable there. Everyone was kind of comfortable at that price. So yeah, I agree with that.
So one of the things that you work on is really, addressing the scalability and the usability of the crypto space. And I mean, you'll do a much better job of explaining Commerce Block to everyone than I would. But let's talk about it a little bit. You obviously have a background in banking, and you're super, technical when it comes to, building these platforms and whatnot. So let's talk about what you have done here regarding Commerce Block and why this is a component that's going to advance the crypto ecosystem.
Yeah, so I'm a technologist. So although I worked in banks, I worked very much on the technology side. So I worked on the trading floor for Merrill Lynch, that became Bank of America after 2008, and JP Morgan, very much on the equity side, doing either derivatives or cash equities. And one of the things that always interested me on Bitcoin was, we all agree Bitcoin as sound money is interesting. And how do you make other assets available? And Bitcoin has seen many journeys on that. We originally had things like colored coins, which I was involved with. Then you had things like Counterparty. And then you've had Ethereum, which, to be honest, took me I didn't see Ethereum coming. When Ethereum happened, I think there was a lot of excitement. Then the DAO happened, which was obviously a major crash because of I think there was a bug in the DAO and many people lost money. And then you had the ICO. And now the ICOs kind of like showed everything that was good and bad about crypto. It decentralized crowdfunding, but it also, showed a lot of scams. And what we've always tried to show is we wanted to build a layer where people could still build assets, but in a secure kind of way. So we built what's called side chains, which are chains which kind of sit on top of other chains via various mechanisms, either pegged to Bitcoin or pegged to another token type. Or in our kind of world, we use Bitcoin's kind of proof of work. So as we all know, Bitcoin, has one of the biggest ecosystems in terms of infrastructure. We try and build a chain on top of Bitcoin, which utilizes its proof of work, its security. So a lot of our clients are in the kind of precious metal space, or perhaps in the art space, or we have clients as well in the property space, and they want to build tokenized assets. They don't necessarily want to use another network like EOS, Ethereum, or Bitcoin itself. They want to own that network because they want to have control over it to make sure that any transaction has appropriate KYC, is legal, and also that they can control the hardware to make sure it scales appropriately. But what I'm describing to you sounds like just a database. So why use a blockchain? Well, blockchain has immutability. It's very hard to change transactions, reorder them. And what we do is we build on top of Bitcoin's proof of work. It's basically, we timestamp into Bitcoin in a non-forkable way. And we found that there's a lot of interest in that, because there's a lot of clients that have looked at the ICO space and go, well, this is great. This can remove a lot of the intermediaries. However, how do we build on a platform that's stable, that we don't have to worry about forking, we don't have to worry about security issues? I mean, there's always going to be security bugs and stuff, but they're in control of that. And that's essentially what we do. So our bigger clients are in property and precious metals, and we're seeing a lot of demand on that area.
Yeah, I don't know what the actual numbers are at the moment, with Bitcoin coming down, but I remember, these different statistics on, how much electricity Bitcoin was using to mine. It was like, equal to some countries. in the world, where with all this mining power going into Bitcoin. So, you guys are using this power, this horsepower to
I'd
be
like
the
to comment
underlying.
the mining.
Go ahead.
A lot of people talk about how Bitcoin mining is wasteful, but we have to remember no one's building coal farm, burning fossil fuels to mine Bitcoin. Most of this mining happens near hydroelectric state. It's wasted electricity. It's electricity that wouldn't be used anyway. So a lot of times you hear, in the media about how Bitcoin is bad for the ozone. Well, not really. It's using a lot of wastage electricity, and there's been some very good mining reports which have kind of highlighted that in the last few months. One, from CoinShares, which you should have a look at. But most of this, no one's building a coal mining plant for Bitcoin. You may notice it tends to come to places where electricity is free. And the game theory, kind of in Bitcoin, you want cheap mining, you want cheap electricity. You're not going to do any mining where electricity is a scarce resource.
So, and you guys obviously value that.
Yes,
is there something about Bitcoin's network that you see better than other type of networks that are out there, Ethereum or whatever other networks that you might be considering? You like Bitcoin, and it obviously suits the needs of these databases and the immutability and all the properties that you're looking for the clients that you're serving.
Mm-hmm.
So yeah, touch on that a little bit. And I kind of want to get into, what these clients are looking for a little more, so we can kind of really understand where this technology is headed and what it might look like, 5 and 10 years down the line.
Sure. Bitcoin has the most proof of work. So what does that mean? It's essentially got the most miners mining it. So purely that just essentially means it's more secure. So if something like Dogecoin ended up overtaking Bitcoin, we would build on top of Dogecoin. It's really about picking the chain that has the most proof of work. And we're not the first people to try this. You had the attempt with Mastercoin. I think Tether, which is built on OmniLayer, essentially is built on top of Bitcoin as well. What we've done is we build blockchain infrastructure for clients, which the clients own, but then they use Bitcoin's proof of work as a layer of security. So we have this protocol called Mainstay, which has been in development for the last 6 months. We have a paper, and that essentially allows us to attest the data in our client's blockchain infrastructure to the Bitcoin protocol. And again, if Dogecoin or another coin, Litecoin, have more proof of work than Bitcoin, we would move to there. But it's about using the chain with the most proof of work. Now our code base is a fork of Bitcoin, because whereas some people see Bitcoin as 10 years old, we see it as basically having 10 years of engineering. It's battle tested, it's been around. And for us, it's more stable, it's more secure.
Okay, so Nicholas, let's talk then about what the clients are looking for. They're looking to create their own digital asset. Are they looking to use it as a monetary component, with these new technologies, or is it for data storage, or
it's basically building a new token. Now, we've seen tokens obviously in the ICO landscape. We have clients that would want to create a property token or a gold-backed token, and they want full control of the infrastructure. And a lot of it's for regulatory reasons and for scalability reasons. Regulatory reasons, if this token is built in a jurisdiction that requires certain AML and KYC, we can build that into the rules, into the technology stack of the blockchain we implement for them. At the same time, they also want to control the technology from a scalability point of view. Different clients will have different scalability requirements because they have different, they will scale to different types of clients. Property doesn't move as much as, say, a gold-backed token would.
So in terms of where you see this going, what do you see this fully disrupting down the road here? Is there specific industries that you anticipate being disrupted over the next few years as this really starts to take hold?
Well, I think if you look at Bitcoin, why did people like it? If you were to take, say, Western Union and replace all the databases in Western Union with blockchain, you wouldn't have Bitcoin. You would have, a slower version of Western Union. And what Bitcoin allowed us to be, it allowed anyone to be their own bank. You have your private keys, you are your own bank. You don't need anybody else. You have basically financial sovereignty. And what I think with the tokenized, what we're seeing now is we're moving to tokenization, whether that's real estate, equity, precious metals. We're going to a tokenized world. And we've seen a few interesting examples of how this has happened. We've seen it in the ICO space, which was very much about using Ethereum. We're now seeing these STO platforms, but they're all kind of like becoming different honeypots. Essentially, in the ICO space, you were reliant on the ICO, the Ethereum infrastructure. These STOs, you're very much reliant on the STO infrastructure. We believe, and I think that by building your own blockchain, you can basically manage your own asset. You manage the asset which you deploy on. So whereas Bitcoin means be your own bank, a blockchain in our world will mean manage your own assets. So if you're a company that wants to issue shares, you would issue it on your own blockchain, and you would use Bitcoin's proof of work to secure it, and various other tools that we believe that will appear in the ecosystem. But I think it will very much change. So if you look at what a gold ETF is, if you look at gold is taken out of is mined, there are maybe 20, 30 intermediaries that you have before you get to, say, someone like you who has some sort of pointer to a system which represents the gold ETF. With a blockchain backed by Bitcoin, we believe there's probably only one intermediary, and that would be the relationship between the blockchain and the gold that's actually being mined and held in a vault. And I think that's what you're going to see here, which is basically the tokenization of all assets.
So, Nicholas, is it possible, let's say we assume these tokens are shares,
Yes.
they're shares of a company. Will there be interchangeability between the crypto markets and the traditional equity markets? Is that possible, or is that foreseeable that there's some sort of marriage between the two? Or are they so different that it's going to be one or the other?
I believe it will. It may take time. There's a lot of regulatory challenges, although I think a lot of the regulations, it's really about updating to what a blockchain is. But ultimately, Bitcoin asked no one's permission, but somehow, because it was disruptive enough, it got forced into the financial system. And as we were talking about 20 minutes ago, large institutions are moving in that direction. You have custodial solutions from big companies now in Bitcoin. You even have JP Morgan doing JPM coin, which is interesting. People have laughed at, but I tell you, when I worked at JP Morgan in 2014, that would never have been an option. They were looking at Hyperledger. The thought of doing their own coin on an Ethereum clone was quite out there. So we are seeing disruption. And I think the ICO model did disrupt the equities. I mean, we wouldn't have STOs without ICOs. And you look in Asia, they're still happening. They're still coming on strong. And I think this will disrupt. It's just going to take a bit more time.
So as people who truly appreciate the fundamentals and what blockchain offers the crypto space,
Mm-hmm.
It's our tendency is to say, forget about price, because this is something that the world needs regardless. But, when I go down something like coinmarketcap.com, it's hard to deny that everything is correlated. We're seeing a sea of green, and everything is essentially green at the moment. So my question is do you believe that for something like this to take off, are we dependent on a rising Bitcoin price to see some mass adoption in what you're trying to do?
Well, we've got to understand that on CoinMarketCap, most of these tokens or coins like Bitcoin are not really being used day to day. It's still very much a speculative market. A cryptocurrency exchange is essentially a gambling site. I mean, let's call it what it is. So unfortunately, the correlation tends to be all one. They all go up together, they all go down. You see one or two that kind of flickers. But once we start moving into real world transactions, so for example, there is a percentage of people who use Bitcoin for real world usage. There are people, when I worked in the OTC game, when I lived in New York, there were people that needed Bitcoin as a form of remittance. And all you see in OTC is actually in the OTC market is Bitcoin, because Bitcoin is probably the only coin that has real world use cases right now. I mean, and what I think once you start seeing other tokens come on that represent real world assets, whether that's property or equities, you're going to see that it's going to correlate away. However, I do think Bitcoin will ultimately be the currency that people settle on. I mean, it will be much easier to settle on a a blockchain asset like Bitcoin than it will with some fiat unless you create some sort of stable coin. And I believe that, yes. But at the moment, it's very speculative. So it's hard to take coin market cap and really kind of say this represents the real world.
So if you wouldn't mind, talk about your company. Are you guys dependent on prices moving up? I mean, what sort of success are you guys seeing with Commerce Block at the moment that gives you confidence and the stamina to withstand maybe a potential extended bear market here in the space?
We're not that dependent on the price. I mean, we use Bitcoin's proof of work for security, but if Bitcoin became so insecure, that would be an issue, but it's not something I worry about. I mean, our challenges are very much in the regulatory space. It's, there's lots of demand to build these tokenized assets, and the regulation hasn't really kept up to date. And that's where the challenge is. And that's where, we lose sleep on. That's where I get stressed about is how can we basically tokenize, because there's no shortage in people wanting to tokenize certain assets. It's how do you do it in a legal compliant way? And that's always going to be a challenge. And then it's, working with the existing financial system. You can be very wealthy in Bitcoin, but you may not be able to convert that Bitcoin into fiat and put it in a bank account. These are the kind of challenges. So yeah, we struggle more working with the existing financial system and kind of translating an outdated regulatory environment with relatively new technology and new ways of doing things. Because essentially a blockchain is a way of doing something peer-to-peer, whether that's Bitcoin, a security, or a gold-backed token. And a lot of the existing regulatory environment and financial system doesn't facilitate that. It's built around having 100 intermediaries, basically middlemen. If you buy a gold ETF, how many middlemen are there between you, an owner of that ETF share, and that piece of gold in a vault somewhere? It's probably an army of lawyers, an army of accountants, and many middlemen that are sitting in regulatory bodies. And that's what this technology is really all about, to be honest, if we were to simplify it in a few words.
Well, Nicholas, this was a very timely interview. I mean, we had talked about doing this for what, maybe 2-3 weeks?
Yeah.
They're getting this interview done and having this conversation. But neither of us were expecting or planning to do this on the day that we have this massive price spike in the crypto space, even though we welcome it and it doesn't surprise us because we know that there's a lot of interest and you are a testament to all of the hard work and labor and engineering and technology that's going on in the space. And one of the things that I always say is that, money attracts talent, and there's a lot of money and capital that's being poured into the crypto space. And you are, again, an example of that. So I appreciate your time here coming on crushthestreet.com. If you wouldn't mind, share some closing thoughts here on kind of what we talked about. What's your general advice for people here in 2019? And if you would, let everybody know about Commerce Block and ways they can get familiar more with what you're doing.
Yeah, I mean, as I said, I won't give investment advice, but it's a fascinating technology to understand, and I think it can apply to whatever sector you're in. I mean, there's not much in the world that can't be tokenized, and I think the quicker you understand this, and if that's getting involved in Bitcoin, learn to manage your own keys, learn to use a wallet. The better you are for the future. That this is like 2001, where you want to be learning about how to use the internet, and I think we're in a similar space because I think managing your keys is going to be about how you manage your money, how you manage the assets you own. Now, we at Commerce Block, we're a small part of this, but we enjoy what we do. If you want to find out about us, come to commerceblock.com. I like to tweet every so often about what I think is going on. I think my Twitter, Gregory _Nico, and we're fully open source. Even if people want to use our technology but don't necessarily want to pay us to consult or any of our services, it's all there on our GitHub. And this is one of the good things about this community. There's anybody that's not doing something open source probably doesn't belong here. It's a very transparent and open environment.
Well, Nicholas, I truly do appreciate your time here with us. We'll have the links in the description area. Thanks for coming on Crush the Street with me today.
Thank you.